Everybody talks about strategy, indicators, entries, setups, but this is what really screws beginners. They think trading is like playing poker or predicting the weather, or worse, that it's just buy low, sell high. So easy, right? This step-by-step guide is designed to help you build a strong trading foundation even if you're starting from zero. By the end of this video, you'll learn how to understand what's actually happening on a chart, how to avoid beginner traps that quietly drain your account, which tools are truly essential, and how to build a real strategy. Let's get into it. Price chart is a picture of mass psychology. Every candle is showing you how humans and bots are reacting to supply and demand in real time. Price goes up, that means buyers are outbidding sellers. Price drops, sellers are dumping more aggressively than buyers can keep up. Price chops sideways, there's indecision, equal pressure from both sides. But here's what most people miss. You're not just trading against other retail traders like yourself, you're in the same arena as high-frequency algorithms, hedge funds with billions, and traders who've been doing this longer than you've been alive. They're not reading news headlines, they're reading order flow and exploiting liquidity. A lot of people say, why bother day trading? Just invest in the S&P and wait 30 years. And you know what? That's not even bad advice. If you're patient, you have a job, and if you're okay with the slow returns. But let me flip the script. Let's say you invest $1,000 into the market. The S&P 500 grows 10% in a year. Great, you made $100. But now imagine making that same $100 in 15 minutes with proper risk management on repeat. Sounds crazy, huh? That's what attracts people to day trading. Day trading gives you the potential for faster growth. It also gives you control. You're not just watching your portfolio bleed during a recession, but, and this is the key, with greater opportunity comes greater complexity and way more risk. Okay? Most people who jump in for fast money get wrecked within weeks. So don't treat this like a game. Treat it like a skill set. Now let's talk about one of the most important things in trading. The real reason most traders fail are not bad strategies. It's mindset, or more specifically, the lack of one. Let's break down 3 essential mindset shifts every beginner needs to hear. 1, losing does not equal failing. You will lose trades. I don't care how good your strategy is. What matters is how much you lose and whether your overall edge still works. A professional trader can be wrong 60% of the time and still make money. Number 2, being wrong is okay. You're not trying to be a psychic. You're trying to exploit probabilities. If you're risking $50 to make $150 and your strategy hits 40% of the time, guess what? You're profitable. Number 3, a profitable trade does not equal a good trade. If you broke your rules and still made money, well, that was luck. But if you followed your plan, respected your risk, and still lost, that was a good trade. So now that your mindset is in the right place, let's talk about what you actually need to start trading. Let's clear this up right now. You don't need a fancy setup, 6 monitors, or a $5,000 laptop to get started. You only need 3 things. That's it. A charting platform. My go-to is TradingView because it's free, it's clean, and it has every tool you'll ever need from indicators to replay mode. Number 2, a broker or exchange. This is where you actually place the trades. My advice for this, for Forex and futures, take a look at Funded Next. It's a solid option if you're aiming to trade with a funded account. You can use my code in the description and you'll get 5% off your next challenge if you want to go that way. For crypto, try Bybit or Blowfin. These have good UI and low fees. But importantly, you don't need a live account right away. You can use a demo to practice risk-free. And that leads into the next point, a trading journal. This is a secret weapon, okay? If you don't track what works, you're just gambling. Use a spreadsheet, Notion, Edgewonk, whatever, but log, entry, exit, reason for entry, screenshot of your setup, and what you learned. Okay, now we come to the part most beginners are excited for, and the part that happens to overwhelm them the quickest. When you first open TradingView, all you're gonna see is red and green chaos, candles going up and candles going down. But once you understand market structure, it'll start to click. Here's what you should first try to do when you open a chart. Step 1, identify the trend. Is price moving up with higher highs and higher lows? Is price moving down with lower highs and lower lows? Or is it stuck in a range? Never trade against the trend as a beginner. That's a shortcut to frustration. Trade with the trend. Step 2, mark key levels. Look for zones where price is either rejected multiple times, consolidated, or flipped from support to resistance. These levels act like magnets. Step number 3, that's looking for confirmation. Don't just guess. Wait for a reason to enter. That could be either a candle rejection, a signal from your indicator, or a confluence of factors. If you don't see any signal, do not trade. It's as simple as that. Alright, now if you know how to read a chart, let's talk about indicators, what they actually are, and how to use them the right way. An indicator is just a tool. It takes price and volume data from the market and transforms it into something more visual, something that helps you spot trends, momentum, reversals, or entry signals. But remember, indicators don't predict the future. They react to what's already happened. That's why using them blindly is one of the fastest ways to lose your money. The goal isn't to find a magic indicator. It's to find tools that support your strategy and give you confidence in your decisions. So let's cut through the noise and focus on the ones that are actually useful. One set of tools that I personally use, and honestly wish I had when I was starting, comes from Easy Trades. They've built 2 indicators that cover most of what I look for on a chart: Easy Algo and Easy Oscillator. Easy Algo is great for simplifying your analysis by showing dynamic support and resistance zones and helping you read the trend more clearly with candle colors based on Helkin-Ashey calculations, so you're not left second guessing the market's direction. On top of that, it provides clean buy and sell signals that don't repaint. Easy Oscillator, on the other hand, is useful for spotting momentum shifts early and identifying divergences before they become obvious. Now, while I still use price action as my foundation, these tools help streamline that process. It gives you more confidence in your decisions, and it really speeds up that learning curve. If you want to get access to those indicators, check out the link in the description. Now we're going to talk about something that won't help you earn money, but to save it. Let's say you got a strategy idea. Great, but don't go risking real cash on it yet. Here's what you do instead. Step 1, bar replay tool. That comes from TradingView. Pick a random date, hit replay mode, and trade candle by candle. You won't know what's next, just like real time. This is perfect for stress testing your ideas. Step number 2, use a demo account. Sign up with your broker of choice, Funded Next, Bybit, whatever. Use the demo to test entries, exits, execution speed, and order types. Train your mind first before real money's on the line. Step number 3, again, journal everything. Log your simulated trades just like the real ones. This gives you data and helps you refine your edge before it costs you. Okay, you've learned the tools, the mindset, and the structure. Now let's build a strategy you can start testing this week. Here's the 3-part formula I use on almost every single trade. Step 1, context. First I ask myself, what's the context? Is the market trending or ranging? Are we approaching a key session open like London or New York, where volume usually spikes? That alone can change everything. Step number 2, that's the setup. Are we near a strong level that's been respected before? Has there been a liquidity sweep, a quick move to grab stops before a reversal? Maybe I spot a fair value gap or a golden pocket, which often acts like magnets for price. Then there's step number 3, confirmation. Finally, I wait for confirmation. That might be a clean rejection wick, a shift in market structure, or even a buy or sell signal from Easy Algo lining up with everything else. If all 3 don't align, I pass the trade. No stress, no FOMO, because the best trades come when everything lines up, not when you try to force it. Another important part about day trading is risk management. Here's the difference between a trader and a gambler. A trader controls their risk. Before you enter a trade, know exactly how much you're willing to lose. I only risk 1 to 2% per trade. If I'm wrong, I shrug and move on. I aim for a 1 to 3 reward to risk ratio. That means risk for $100, aim for $300. Risk $200, aim for $600. Why? Because even if I'm wrong more than half the time, I still grow my account. One trade should never wreck your balance. 10 bad trades in a row should hurt your ego, not all of your capital. Let's practice our strategy on a real chart. I was watching the Euro versus the USD on the 5-minute time frame. Price swept liquidity below a previous low, then immediately broke structure to the top side and left behind a clean fair value gap. Easy Algo lit up with a buy signal right in the gap zone. I entered, set my stop just below the fair value gap, and aimed for the next liquidity level. Result, 1-to-3 risk to reward ratio. No stress, just followed the plan. Could it have failed? Of course, but I had context, setup, and confirmation. That's all you can ask for. This is just the foundation of one approach. If you want to dive deeper into other strategies, make sure to subscribe and check out the other videos on the channel. Alright, time to bring it all together. If you remember one thing from this video, let it be this. Trading isn't about being right. It's about being consistent. This is a long game. You're not trying to win today. You're trying to still be trading in a year, 2 years, 5 years, etc. Use the tools, build your playbook, stick to your rules, review your mistakes. Do that and you'll be ahead of 90% of beginners who quit in just 1 month. So if this helped you, make sure to share it with someone else who's just starting out. Smash the like button, subscribe, and drop a comment letting me know what part hit hardest for you. And if you want to start right now, again, all the tools I mentioned are linked right below. See you next time.